Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will be moving to the order flow, so the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment is testing and rejecting a quite important monthly structure zone. From here, all this previous rejection to the upside was created. Again, here the market tested its zone and rejected it to the upside. Again, here tested and rejected, again here, and at the moment we can see how the market is currently testing the area and rejecting it to the upside. In a situation like this, we could expect more potential bullish price action to be created. Now, if we look closer and go down on the weekly time frame, what we can see is that the market does seem quite overextended to the upside at the moment. In fact, looking left, we can see how we had a massive wick get created all across this area. The market here tested its zone and rejected it to the downside quite aggressively. Now, at the moment, first of all, it's important to notice that at the moment, the market has closed in this zone. So already buyers seem more in control of this market than what was happening here in this exact same area. The second thing that we can notice is that we even exceeded this previous high. So buyers try to even break above this previous high. At the moment, it seems like they failed, but this doesn't mean that we might see some consolidation inside of this zone before then getting a clear breakout, considering that, as we have already noticed, by looking at the monthly time frame, we are currently rejecting quite strong monthly demand and support. Dropping down on the daily, what do we see? Now, from a daily perspective, I did speak about EURUSD a couple of times in the past few days. I spoke about it after the creation of this impulse and correction. From here, I explained all the reasons for which I wanted to see more bullish continuation. Then we had the creation of this M pattern, and from here, I made another breakdown explaining all the reasons for which we could expect a potential rejection to the upside. And by the way, I will link in the description these previous analysis, so you can go and check them out for more free education. However, at the moment, if we look closely, we can see how the market has in fact created a new impulse and correction. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have a market which is currently testing the area in between the 50% and 0.618 of the Fibonacci taken on this daily impulse, which, if we look closely, we can also see how it is lining up perfectly with the previous resistance turn support. Now, this creates quite strong confluence of support, because when this resistance was created and from here the market broke it to the upside, this previous resistance was turned support, and now that we also have the Fibonacci's there, this means that this is a confluence of support area, which increases the probabilities that from here we might get a potential rejection to the upside. So how we could be approaching this potential move? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. And the most important thing at this point is to check what is going on when it comes to the order flow to understand how the directional aspects of these two different types of analysis can come together. Now, if we look at the net positions, we can see how with the last report, institutions have been longing EURUSD quite aggressively. We went from having 143k net positions all the way up to 163k net positions, with 18,000.7k longs getting added with the last report and 1.1 K shorts getting closed. So we had 1,000 shorts closed, 18,000 longs added on from an institutional perspective on EURUSD. Now you might be asking yourself, why are we only looking at the euro if we actually want EURUSD? Well, that is because you have to keep in mind that all currencies on the spot are traded against the USD. So if we're checking the data for the euro, we are actually already checking EURUSD. So if we look at the overall situation at the moment from an institutional perspective, we are currently sitting with 244,000 longs and 80,000 shorts. So definitely getting quite strong. So how we could be approaching a potential rejection to the upside? Well, as I was saying previously, the monthly, weekly, and daily combined with the COT data, those are the best timeframes from a directional aspect. However, when it comes to confirmations and entries, the best timeframes, those are the intraday timeframes, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest you to go and check out transparentfxtrading.com. Here you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the software that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, you will see that at the moment there is a massive promotion in which you have both a huge upfront discount on the lifetime access price of the mentorship program, one-time payment for lifetime access from $497 all the way down to only $97. Plus, since we have partnered with the forex broker Blueberry Markets, if you want to open an account with them after you join the mentorship program, using the link from your student dashboard, you can get a full refund credited back into your trading account. This is totally optional, just if you want to. So if you scroll down, you will see that directly from here, there is definitely a bit of time left, so you can still join directly from here to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.